You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few fun things for you guys to tune into on the old network. By the way, if I sound a little bit different, that's because, quite frankly, we're still in the old Southern studio here. So next week we'll be back in the old Options Insider Radio studios like usual. One thing, getting some background. There we go. Back in the old studios, so we'll sound normal next week. Of course, just in time for the July 4th holiday. But next week for Vol Views, it'll all be as normal. So that means if you're listening to us live, like you can every Friday, noon Central, 1 p.m. Eastern, via Mixlr, you're going to get the nice raw recording today. So no music, no transitions, just us, as we used to do it old school, as they say in the old radio biz. But still good stuff. And of course, you always get the edited, beautiful podcast as usual at the usual time via the usual outlets. So your iTunes, your TuneIns, your Stitchers, your so-ons, your so-forths, all the way out to our mobile app, which is available, of course, for all of the major platforms, iOS, Android, and the ever-popular Fire OS. And however you listen, hit us up. We do love to hear from you guys. Questions, comments, pearls of wisdom, sarcastic pearls, all sorts of good stuff. Sarcastic gems, maybe a nice joke or two. We like them all. Hit us up at Options on Twitter or on Stock Twits or all the other usual places you find us, including the old-fashioned way, questions at theoptionsinsider.com. Speaking of old-fashioned, I am joined by the most old-fashioned of volatility guys. No, not Mr. Don S., but a good close second, Mr. Russell Rhodes. He is of the Options Institute, as well as the man about town over there at the CBOE. Mr. Rhodes, welcome back to the program. To you, sir.
I am always happy to be here. I gotta call in and get some quotes, since I'm all old-fashioned and everything today.
I don't know what a good old-timey VIX quote would be. Oh, remember back before there was a VXO? Ha, ha, ha. When VXO was the
VIX.
only thing? Is that a good old-timey VIX quote? I don't know.
Yeah, I'm going to go trade some OEX. Yeah.
Go trade some OEX,
The
see?
VXO's got an 8 handle.
Got to get my 1.5, see?
I'm going to talk old-timey real fast all day.
I like it. I could do a whole show like that. That'd be kind of fun. Real quick, since we're talking about it, when's the last time anyone ever mentioned the 1.5 to you?
The 1.5?
Yes.
I don't know what that is.
Oh, there you go. That's the old OEX to SPX spread. OEX, obviously.
Oh, okay.
OEX 100. It's been so long, listeners, Mr. Rhodes. It's gone from his memory. That neuron hasn't fired in so long, you've forgotten what it is.
I was in junior high back then. Come on.
Yes, indeed. You were just a mere tadpole swimming through, hoping one day to get to the big volatility stream. Speaking of that big volatility stream, let's get right to it. It's time for our volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. Like the man said, this is indeed the portion of the program where we break down the week that was and still is, actually, quite frankly, from a volatility research and all sorts of fun types. By the way, we are waiting for the meatball. He is holding his big semi-annual, semi-annual, depending on how you look at it, Option Pits Pro Traders Conference, and he is running back from that to be able to join us here forthwith while he is ready. Let me just see if maybe he's ready now, for all I know. So yeah, he's going to be joining. He was just on a little bit ago. He'll be joining us soon. He'll let us know when he's ready. He's got to run back from the event, talking all things VIX. Maybe before we get into the vol review, really quick, Russell, since you were just down at his event, for all of our listeners who couldn't attend, obviously it's very VIX centric, very VIX focused. Give us a little bit of an overview of what was going on there and what you guys talked about. Well,
I only attended as the final and of course best speaker. And this is going to blow you away. All I talked about was V stocks.
So you, Dr. VIX, did not mention VIX once?
I talked about it. I talked about how V stocks and VIX behave differently, but I talked about V stocks, the futures, the options a little bit, and then there are two new ETNs that are based on V stocks, VIX and EXIV, which are long and short, kind of like VXX and XIV versions. They don't trade a whole lot yet, but there's some interesting relationships between the VIX index and the index that VXX has been set up to follow. And we just talked about the price differences and the behavioral differences, how European volatility is a little bit more anticipatory than U.S. volatility, especially when you have a Eurocentric event. Think French election or Brexit, or I don't know what the next election, or the next time Greece runs out of money, whatever. But those types of things actually show up as interesting divergences between between VXX and EVIX.
So here we are. I expect you to talk nothing but VIX, a full day of VIX. You go all the way to far-flung locales like Kamloops and Krakow to speak about VIX, and you go downstairs from your office and you talk about V stocks. Interesting. I did not expect that. Speaking of which, that crazy scratching means we are joined by the meatball himself, Mr. Greasy Meatball, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, welcome to the show. We were just talking about your big event. How's it going?
It was a home run. We had a great time. We learned a lot. We had some fun, and Russell was the veritable cherry on what was a conference Sunday, and he did an excellent job. So
for our listeners who can't make it, you do talk a lot of VIX and vol there. What were some of the takeaways from your event?
I mean, some of the takeaways were there's some. Well, starting with Russell, there's some interesting things in V stocks and in EVIX, some of the BATS listed products. The curve is changing in VIX via the Thompsons. I did a discussion on different types of measurements of Vega. So I went through raw Vega, weighted Vega, and vol Vega, something that many of them had not heard of. Adam Singh, who's one of my going to be doing some work with us, chatted on trading the skew curve. And I actually think the highlight was one, we had Bill Baruch come and talk Bitcoin and blockchain. And Derek, who's one of my clients, also was the former CEO of a medical testing company and a pill manufacturer. And he discussed how the pipeline of a biotech works, how to trade it, and what's going to happen when it trades. And that was really fascinating. So I would say it was essentially just actionable presentation after actionable presentation, which is why we had such a good conference.
I heard you had an awesome 10-question quiz too, which I heard was very good.
It was excellent.
Some tricky questions in that quiz, but
there were. You sent me a trick question. That was true. So, right. But it was excellent.
Let's get into the week that was and indeed still is, of course, the vol review, and let's just kick it off now. All of us were expecting vol to be, shall we say, far lower last week coming into now than it is right now. Even Russell set, I think, a new low for his picks. He was predicting actually a new low for the VIX. He was predicting 9.25. As we're kicking off the show here, listeners, VIX Cash not playing ball, almost 2 handles north of Russell's lowest ever pick, hovering close to 11.25, 11.13 or so right now. Still substantially north of all of our predictions. I was about 9.7. I think Mark was the oddball high one. I think he was the only one in the double digits, but that was about it. But yeah, so far we got an hour. You never know what could happen, but it ain't looking good for our predictions. As I mentioned, VIX having a little bit of movement this week. I said north of the 11 handle, getting a nice little pop in the latter portion of the week. That means when VIX is moving, VVIX is moving as well. You know, it was kind of languishing for the last month or so. We were kind of saying it was kind of hovering, not really doing a lot. It did spike over 100 yesterday as VIX kind of roared back to life, got up to 105. Today, still in the low 90s, 91 right now as we're doing the show. So if you listen to the show for a while, you know there's a nice range of about 75 on the low side where kind of VIX usually tends to hang out when things are quiet, not a heck of a lot really going on. When it spikes north of 100, you know, things are rocking and rolling. When it gets well north of 100 into, 125, 140, that range, that's when things are really moving. I didn't quite get there, but just moving a little bit. VIX has a little bit of life. We'll see if we can hang here or with the July 4th holiday imminent here in the U.S., if VIX is going to go back to its old kind of quiet, sad, slow erosion ways. We shall see. We'll get to that in the crystal ball. But before we get to that, we talked about your event. Now let's talk about the week that was. Maybe Mr. Rhodes, we'll start with you. Kind of a weird week. We started off really anemic from a VIX perspective. Then we saw VIX come roaring back to life towards the latter portion of the week, and today giving up a little bit of that, but still probably a lot juicier than all of us certainly guessed. So what's your take on the week that was from a vol perspective, sir?
Well, I guess now we've learned that you're supposed to short volatility spikes within minutes of their occurrence. It used to be, about a week, then it was a couple days, and now you just any rise in volatility whatsoever, you sell it automatically. So yeah, it's just unbelievable to me. I think this is one we're going to be looking back at as possibly the first spike before a very interesting second half of 2017, because it feels like the kindling's really dry and somebody wants to throw a spark on it.
So aside from shorting, anything else catching your eye in the movement out there, or the action or the developments?
No, that was really the one thing. They had me. Actually, I spent Tuesday and Wednesday locked up at the Treasury Department, where I wasn't able to really focus on what was going on in the markets and doing some work for their group that monitors hedge fund risk, which took my eye off the ball a bit.
Oh, they had you chained to a desk in the old Treasury?
They did. No windows, lots of security. So watching me on camera the whole time.
Got a feeling
what serious. Like so it was a tough week for me to get a full feel, but doing some reviewing last night and doing some reviewing this morning is just this. Looking at this intraday spike, it just floors me. It just absolutely.
The move was nuts. I mean,
it's a bigger move than what we got for the Trump election in the overnight.
Yeah, and it's
quicker and more compacted.
Yeah, I mean, if you don't believe that the volatility can short squeeze, watch what happened yesterday, and the answer is it absolutely can. It absolutely can. That was one of the quickest, tightest moves I've ever seen in my life in terms of volatility going up and then going right back down. I mean, the NASDAQ lost over 100 points. So we're talking nearly 3%. And it ended up down 2% and now is up 0.21, and VIX is nowhere. VIX is nowhere. Just insane. Insane.
So to what do you attribute the mad pace of overnight action we had over here?
Just the amount of the fact that Grandma and Grandpa are shorting VXX is a sign of the volatility apocalypse that's going to be coming at some point, where I think, and I'm not a big conspiracy theorist, but I think we're heading for a day that would, that would potentially rival some we've ever seen. And, could be the type where, Russell and I were just talking about this, if we get a strong enough move, XIV has to close itself. I would be less than shocked if we saw something like that in the coming future, where XIV just blows up, and not because and on a single day move that amounts to nothing. I could see that, and I think Russell and I were talking that. I'm not so sure he couldn't see that either.
No, we disagreed about that in front of the group.
We did a little bit.
I think I started disagreeing with you when you went to the bathroom while I was speaking.
Oh, okay.
Which is the best time to disagree with you.
Sure.
The compounding nature of the short funds. I mean, it takes the single day move. I'm not 100% sure that I have a hard time seeing that scenario, because we haven't had 100% move in the futures in a single day.
We have not, but with so many people shorting it, I think that would be what. So with Grandma and Grandpa short VXX or short VIX futures, when we get a move like we saw yesterday, if there's actually some real news behind it, it could be a real problem. Right? Yesterday was we made a move like that on what amounted to no news.
Mm-hmm. Just quiet and thinness.
Yeah.
One of the discussions I did have with the guy, the reason I was over there was they really wanted some clarification on what all the different VIX instruments actually give you as far as exposure goes. And and then they said, well, what should we be watching for that shows that's an indication that there's too much speculative short activity in VIX futures or in the VIX market period. And, we talked about the COT report, and everybody focuses in on that. I told them to pay a little bit more attention to the assets under management in the exchange traded products. And if you start to see a really large imbalance with respect to the amount of assets in SVXY and XIV relative to VXX, that might be, kind of like you're talking about Grandma being short the VXX. It's the same sort of thing. It's just, are individuals gravitating into something that they don't think will have a 20 or 25% drawdown because they haven't seen it in a while. And that's the kind of thing that I told them, if I were watching the markets to try to figure out where the next speculative bubbles come from, I'd be watching the assets under management in the short funds versus the long funds.
You're kind of scaring me that Treasury's sitting back and just relying on the COT report. If that's what they're doing, then they're woefully behind on what's actually going up in the marketplace.
They were doing a lot. They're doing a lot more than that. Trust me.
Okay, good. I would assume so, but you kind of scared me when you said they were leaning on that.
Let me choose my words carefully. They have a very heightened awareness of how much risk is actually being taken on. Like, they know if the high short futures is being hedged by call options or not, or is mixed in with some sort of other position. So they know what's going on.
That's good. I feel better.
Let's put it this way. I did not leave there worried. If anything, I left there feeling better about what they're doing.
Good.
Oh, that's good.
I don't want that. I don't want that to be a takeaway.
If all they had was like a lagging 2-week-old reports of what was going up,
no,
I would say things are woefully in need of an overhaul. But sounds like they got their handle on it. So that's smarter heads are prevailing over there at Treasury than perhaps in the past. So that's
I was exhausted after talking to these guys. It was a pretty challenging conversation. So, and it wasn't like exhausted, they're not getting it. It was exhausted, they were asking great questions.
That's good. You're making me excited now. You're making me happy.
Yeah. Okay. I don't want that takeaway on here at all.
I've done a complete 180 in the last 2 minutes on my view of Treasury. I was very concerned.
Don't worry about
now I'm walking away feeling a little bit better. You're talking about the futures. The futures have been an interesting thing to watch of late. You talk about the overnights. We're seeing an interesting realm now, about a half a point or so, 0.6 of a point between the front month and the cash, and about a point, a little over a point and a quarter or so out there in the second month or so. So not crazy town, but still something to watch. Certainly as the cash continues to be fluid, that slope is going to change. Skew Index also hovering right around back in what I would deem to be the calm range. 125 to 130 certainly is not where you're going to get too excited. It's right around 129 right now. Slightly calmer than last week, but nothing to write home about. When it gets into the 140s and 150 range, then we can start we talk about something interesting going on afoot up there. Speaking of interesting things, hopefully he had a chance to find some while he was chained to a table leg over there at Treasury, because it's time for Russell's Weekly Rundown.
Now, Russell's Weekly Rundown.
All right, everybody. Welcome to Russell's Weekly Rundown. I do apologize to the live listeners. You don't get the nice little drop. We'll get it for you on the podcast, though. So all you podcast listeners, there you go. Mark will do it for you.
There you go.
Russell's Weekly Rundown. There we go. All right. Mr. Rhodes, this is, of course, where you cold court for 30 to 32 minutes approximately on all things VIX Weekly. What's catching your eye, sir? And how's our friend doing who continued to persist in buying the 21 strike and keep rolling it? Is he still alive? Is he still rolling?
I didn't see any rolling. If they did, then he rolled into a standard expiration. Really pretty quiet week for the weekly. There just wasn't a whole lot going on. I do try. Somebody actually on Monday. This was actually a pretty interesting trade, and I think I think this is what I'm going to write up for the weekend in my blog. On Monday, somebody trading the June 28th weeklies, the ones that expired on Wednesday morning, they sold 989, nice round number, of the June 28 10 calls for 41 cents, and they bought 989 of the 9 calls for $1.25. They spent 84 cents, and a VIX settlement above 10 results in a 16-cent profit on that. Not such a bad idea, and settlement was 10.52. So that's a pretty,
not bad,
novel try. I mean, it's not a home run, but it's a fun use of VIX options.
We've certainly seen crazier
here.
Using
the weeklies. Yeah, no, it's I mean, what were the chances that we would get a 984 or below settlement? I know we've had lots of goofy stuff going on, but I have a hard time disagreeing with that trade. At first, I looked at it and I'm like, 84 cents for 1 point wide, but then it makes sense. Totally makes sense. And then Wednesday, the only other real interesting trade, not even sizable trade, and I guess this is a bear call spread stupid. I don't know. Somebody traded the standard July and the July 26th options, and they sold the 17 calls with both of those expirations, and they bought the 25 calls with both those expirations. For the standard July 19th options, they basically did that trade at a credit of 19 cents, and they did the same trade with the July 26th options for a 28-cent credit. So as long as we stay below 17, they're in good shape with that one. But they did 2 bear call spreads, same size, back to back, the exact same time. So
call spreads,
and it does, yeah.
You don't see many of those.
I don't know, or Well, I think I don't know. Why would you do two different? Maybe they were debating over the 19th or the 26th. What should we do? And they said, well, let's just do half and half. I don't,
I'm on record many times as not being a huge fan of stupids, let alone call spread stupids. So I'll leave it there.
Well, they're bear call spread stupids.
I'm sorry, bear call spreads. That makes it better. You're right. I
Yeah,
withdraw.
no, it's not as stupid as it sounds. So, and I couldn't find a single weekly trade of size today yet. And I dug.
Yeah, today, surprisingly,
it's tough.
Quiet day out there on the old VIX mothership VIX options front as well, with about our averaging right close to 700,000 contracts a day right now, about 697,000 going into the close to holiday weekend here today, about 250,000 or so up on the tape. So it seems like it's going to be a less than ADV day when all things are considered. You talked about crazy trades in the weeklies. I think I would definitely, compared to that one you said, which is kind of weird. You're right, 84 cents for a $1 spread. But that guy loading up on all those 21 calls and then continuing to roll week after week, I could certainly probably quantify that or qualify that in the crazier category as well. Again, in the mothership options, it was a heftier week earlier this week, though, as expected on Thursday with that nice move. And the VIX generating some actual action out there in the big VIX motherships options as well. 1.16 million contracts going up yesterday. So yet again, another week and another time that VIX hits the M mark rather than the K mark, hitting the million contract mark. So VIX can put up the numbers when it wants to, that's for sure. Wednesday, got around 500,000, 510 to be precise. Tuesday, getting up to about almost 724,000, 724. Monday, 630K. Again, the ADV, right? Just shy of 700,000 right now. And that call to put still hovering in the range where Russell is getting concerned, about 4.1 to 1 calls over puts. So write to him if you want to know how his feelings on that. I know once it gets over 3, he starts getting nervous. Once it gets over 4, he gets a little bit freaked out. Before I get into the hot strikes for this week, Mr. Sebastian, you got some thoughts on everything that's cooking out here?
Yeah, you know what I can't get is the July future. So, we've got a VIX of 11, which is crazy high, right? The July future is trading 12.25. What's shocking to me is take a look at the price of the August future right now, Russell. 12.65. There's a 40-cent spread between July and August right now. It's very difficult to me to come up with a way that I wouldn't want some sort of ratio call spread or a call spread swap between August and July. I feel like August is too cheap. Even if July might be fairly priced, but does August seem too cheap to you guys?
Do you think and this goes opposite of what you said in the classroom just a few minutes ago? Do you think maybe knowing that Congress is going to be on recess and they that's where they think the risk is right now, and that's why they're out of the way. Also, do we have a Fed meeting before the July 19th expiration or after?
I don't know.
I'm going to look it up. I'll look it up. You talk and I'll look.
All right. I'm looking. I mean, that could be it, but I just feel like 40 cents for a month-long look at the market is really off. And the spread between August and September is a full point. Now, September at 13.60 is still too cheap. But 40 cents between July and August just seems wrong. Why in the world? Yeah.
And when did you bring I hate to put you on the spot, but I remember having this, either I'm doing a deja vu right now or we've had this conversation before.
Where August being too cheap?
No, not necessarily, but just where the months seemed too close to parity.
Yeah, I think
with some time to go.
I saw something like that in I want to say April, May. Does that sound right?
Yeah, you brought this up before, and then things spread out before they got back in line. The next FOMC meeting is July 25th, 26th, so it's after July expiration, before August expiration. But I doubt. I mean, that's a throwaway meeting, I think.
Yeah, there's not much, I don't think, really planned for that one. But I'm glad you brought that up, Mark, because we kind of touched on that earlier when we were talking about the curve. And this morning when we wrote it up, it was 60 cents. It's down to 40 cents. I thought 60 cents seemed a little cheap. 40 cents you're right. That does seem like a little bit of an oddball. So if you are out there, listeners, and you want to capture that extra month, 40 cents may not be a bad. I mean, I think a lot of people will be willing to float that 40 cents for a whole month of Trump tweets and everything else that's baked into that.
Yeah, I mean, so let's look at like a call spread swap. You could sell the July call spread, the July 15.20, buy the AUG 15.20, and you pay 15 cents for that spread. That is way too cheap. That is way too cheap. That is wrong. I can potentially, if I get close enough, build a spread where I get paid. I get paid to put this thing on, and that's just wrong. So something is wrong with the way the spread is pricing itself right now.
Or is it so right, sir? I ask you. Is it so wrong that it's right?
And yes, that must be it, Mark.
That's exactly what it is. And now that we said it live here on the show, people will be running to spread that spread out a little bit. But still, you're right. That's kind of something we noted, and we hadn't had a chance to get to it yet. But yeah, that was something that we had noted this morning when we were putting this together. 60 cents and now 40 cents. There's a lot baked into that a lot could happen. I mean, we know that time frame. Traditionally, the August time frame, we should point out, not exactly a rocking and rolling, rollicking, volatile time. That's when we have had some nice VIX lows on the calendar. It's kind of the August summer doldrums, so that could be playing into it as well. But still, it doesn't take much for that 40 cents to pay off. Speaking of paying off, let's look at what was paying off this week. What were the hot things people were slinging out there in VIX options land? We were talking a lot for the better part of a month, probably a month and a half. It was the 30s and the 35s that were leading the dance out there in July. Things have changed a little bit. 30s and 35s have come off a bit, shall we say. Now, number one with a bullet is the July 25 strike. So people perhaps seeing reason moving down to slightly more relevant strikes. Maybe 25 is the new 30. Who knows? 25 is coming in this week. 314,000 contracts to take our number one spot, followed by a little bit of AUG, the AUG 20s with about 290,000 contracts. Number three, 250,000 of the July 20s. So we're getting down the strip, but not so fast. Number four, the July 35 is taking us right back up again to the crazy town strikes. 236,000 of those bad boys open on the number four spot. Number five, the July 15s. Now we're getting more reasonable again. 220 of those open, 20,000, I should say. Number six, the July 18s, 216. So pretty close there between the 15 and the 18s. A nice little call strip there. Number seven are the July 17s with 191,000. Number eight, the July 21s. Number nine, the other crazy town strike on the list here, the July 30s with 170,000 of those bad boys. So there were 350,000+ of those open a few weeks ago. Clearly, a lot of closing action on that strike in recent weeks, and bringing up the bottom of the list, I should say, rounding out our top 10 here. The AUG 25 is 169,000 of those, a total of about 8.3 million contracts open, about 6.7 on the calls, about 1.6 million on the puts. We saw some crazy trades the last couple of weeks. Saw a friend out there dumping, I think it was 35,000 of the AUG double calls for about 6 cents. Anything else crazy on your radar this week in the big VIX motherships, Mark or Mr. Rhodes? Maybe nothing as crazy as that, but anything else catching your eye this week?
Nothing huge. I didn't see any, there was, obviously, as soon as VIX spikes, everyone's like, oh, I wonder if 50 Cent is making money. I wonder if 50 Cent is making money. He didn't care. All right. That VIX is a hedge, and he's happy. But I would like to point out that in one day, 50 Cent made and gave back away hundreds of millions of dollars that do not matter to him.
That's the headline for this show. 50 Cent lost hundreds of millions, and he does not care. Chances are, just maybe he's got something else on the table against that. Just maybe. When you got the queen sitting in the back row, you don't care if your pawns have some froth with your pawns. That's not what you're really worried about. All right, speaking of things people are worried about, you mentioned you're talking a lot about grandma and grandpa shorting VXX and VIX Futures. You got some data to back this up, Mark, or have you been seeing a lot of retail flow pile into these lately, or are you just on a grandma and grandpa VXX kick?
No, I mean, there is some. I mean, it's becoming more and more. I mean, I'm seeing the Wall Street Journal write about it. It's anecdotal, obviously. I don't have any data, but I mean, the Wall Street Journal has been running a series on shorting VIX and who's doing it. And the Thompsons were saying that they had heard their mom was asking about it, and so that's just some ideas. This gives me an idea that the system is, there's definitely a system right now where we could see more of these little one day or interday spikes to jack things up.
I like it. The Thompson's mom indicator. We should use that next time. We'll have to ask her what she thinks about various underlyings and names and things, and that could be our indicator, contrarian or otherwise. Speaking of VXX, it's still lighting it up to the tune, not quite VIX numbers, but still doing pretty good paper, about 366,000 contracts a day. Interestingly enough, 1-to-1 calls to puts, no bias one way or the other, which you'd think, given the way VXX performs, the way we talked about it many times, how many times we've debated that erosion endlessly on this show, what causes it, you'd think there would be a preponderance of puts. Try saying that 5 times fast. But no, 1-to-1 calls over puts, which is interesting, which brings us, Mark, last week I surprised you with what the number one open interest position out there in VXX options was. I'm going to give you a chance to redeem yourself this week. What do you think it is this week, the number one open interest position in VXX? I'd ask Russell, but I know he probably already read the notes.
I'm going to say the July 12 puts.
That's what you guessed last week, too. Nope. No, it was a trick question. It hasn't changed since last week. The SEP 16 call, still number one with a bullet, 99,000 of those bad boys open. Then some more strikes you probably would guess.
Ridiculous.
The Jan 2019 5 put, the Jan 2018 10 put, the July 11 put, all things that make sense in VXX. But number one, still, the SEP 16s. They continue to dominate the conversation out there, which is, I think, still, to me, kind of interesting and worthy of note. Maybe that's another paper for you over there, Mr. Rhodes, as you're working on the doctoral thesis. Why do people trade so many calls in VXX? Maybe they're listening to Ophir from a couple weeks ago and doing their longer-term call spreads. Out there in commodity land, we had seen crude continue to erode, at least from a vol perspective. Not too much. It's still holding in there, but not quite as high as it was about a week or two ago when it was into the mid to high 30s. This week, both OIV and OVX hovering right around the 30 handle. OIV just shy of it, OVX a little bit north of it. Of course, if you're into the commodity vol, come back 1:30 p.m. Central. We'll dive into that stuff in much more detail over there on TWIFO this week in futures options. Before we roll out of the commodities, indeed, before we roll into what our listeners got on their mind, Mr. Rhodes, Mr. Meatball, anything else catching your eye this week? Could be from a commodity vol perspective. I'd ask earnings, but there's not really a lot of earnings on the docket except for the fact that all the quote-unquote FANG stocks got crushed again this week. All are apparently below their 50-day moving averages, as much as I love my technicals. So anything catching your eye in that realm before we move on into the listener town?
How about the rally in oil this week? It was I mean, oil got completely thrashed and has now popped for what basically amounts to 5 days in a row. It's been maybe the only thing that's up on the week is oil.
And I think they heard your compelling argument on Monday's option block, Mark, for the fact that there is no bull case for oil, and then promptly took that as a contrarian signal to rally hard.
Yeah, and then I guess the other interesting piece, and this will go to your futures options guys, is the CME group picked up Russell 2000 E-mini futures and is going to, so those will be duly listed. I think that's going to dramatically increase the liquidity in those futures. And I think that could see a pickup in index trading in the Russell 2000 options that trade at the CBOE. And additionally, it might force that pit to actually get along with their customers.
Nice. Backhanded compliment there, but you're right. We have been talking to those guys. We have been keeping an eye on that. July seems to be the big time frame when all of that kind of kicks off with, you're right, CME listing that on Globex over there and putting maybe hopefully a little bit more muscle, a little bit more love behind the Russell. I think we all can get behind that. We all love to see a little bit more index volume trade. We like talking index products. We don't care what they are as long as there's some indexes and some vol behind them. We'll talk about them here on the show. So hopefully, Russell will get a nice shot in the arm, courtesy of our friends over at CME, giving it a little bit of love. Speaking of a little bit of love, it's time for you guys to give us some love, or maybe if it's the meatball, some hate, whatever you guys want to send us. It's time to open up the Volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Volatility voicemail. Again, I apologize to all you listening live. You don't get the fun drops. You can tune into the podcast. You'll get all the fun drops you need. You're getting the raw version right now, listeners, as we're beaming in here from the beautiful and very warm Southern studios, shall we say, here for one more week until we're back in next week in the old Options Insider studios, and probably equally warm Chicago. And of course, this segment, you guys ask us questions. We also ask you guys some questions. Recently, we've asked you a bunch of interesting stuff. We asked you where you're looking for vol now that VIX is anemic. This week, of course, notwithstanding, about a third of you said crude. So interesting timing out there. Crude did get some vol, then kind of giving it back up again this week. We also asked you guys recently, do you think VIX would break 9 in 2017, or indeed how low would it go? About 63% of you said still won't break 9 for the rest of the year. We'll see how that holds up. We could maybe see a case for that later in the summer, test some of those low. Russell was picking 9.25 for this week, so if he's picking that low, watch out below there, listeners. We also asked you guys about Bitcoin recently, and about 41% of you said you want some Bitcoin options, and only 19% said Bitcoin was too volatile for you. So that's kind of interesting. This week we asked an interesting one, a weird one. We asked you guys, hey, let's get back to basics. What's your favorite way to use options to get some bullish exposure to underlyings, to stocks and to futures? What's your favorite way effectively to get some long deltas? And we said you can go, traditional long call / call spread, the dark side, short put / put spread. Could be a nice stock or a futures replacement, or a bullish risk reversal. Mr. Rose, you haven't had a chance to guess on this one yet. I'll let you go first. What do you think our audience, what's their preferred way to get some long deltas?
Put spread.
Short put spread. Okay.
I think they're smart.
I think they're smart. Are you saying perhaps they like to harvest the risk premium? Is that what you're telling me?
They like to harvest the volatility risk premium.
We haven't said that enough on the show recently. Got to bring that back in. I can certainly see that. Mr. Meatball, you've had a chance to guess on this earlier in this week. I think you said call spread. Are you still? Oh, you said put spread. Are you still leaning that way?
Yes.
All right, so 2 votes for the put spread. I have to say, I thought there'd be more dark side love. It has evened up a bit since we talked about it on Monday. It was only like an hour old back then. They've gotten a little bit more love, but still 50%, exactly half, saying they like their long calls or call spreads. So surprising how much love the long call spread's getting. Number 2, only about 23% saying the short put or put spread. That surprised me. Number 3, my old standby, the bullish risk reversal, about 14%. Coming in last but not least, only 13% saying stock or futures replacement. Let's see here. What else we got? Oh, here's a question. John Shippen. This sounds like it's right up your alley, Mr. Meatball. I guess Mr. Rocklobster, if he was here, he'd like this one too. He says, let's see. If I buy at the money
He's right
premium,
next to me, actually.
What was that?
He's actually right next to me.
Oh, is he? Okay, well, you can ask him.
Yeah, if you want to talk to him here. Andrew, get on here for a second. We have a question for you.
Oh, there you go. Yeah, this is right up his alley because this kind of goes into his whole buy juice ahead of earnings and then sell it strategy. This is from John Shippen. He asks, if I buy at the money premium, maybe let's say an at the money iron condor, so I guess he's buying the gut, selling the wings, obviously. He goes on to say a few weeks before earnings, so he buys it a few weeks before earnings, then sell it the day before the announcement. Is that a good play? Essentially, free decay, plus capture the rise in volatility along with any swings in the underlying. So, Mr. Rock Lobster, if you're there, first off, welcome. And then secondly, this sounds like it's right up your alley. This is kind of your buy a week or two before the event and then sell kind of strategy, is it not?
It is. You know what's funny is because I thought you were just going to ask me a spread question so I could totally screw it up.
Yes, I'm going to ask you when SPX settles in between the spread, what happens? And your mind's going to get blown.
So now you ask me something complicated, and I'm going to give you an answer. So usually what I found is for the most part, even though the vol rises, you don't necessarily make dollars on your straddle. But the decay is usually about only 10 to 20% of normal. So basically, if you buy some juice, you pay theta is much lower. So if you get any kind of market move prior to earnings, you actually have a shot at making money on the straddle. My favorite one to do that is in Microsoft, actually. For whatever reason, nobody cares about that premium. But I would say yes, but the straddle value rarely is worth more than when you buy it. You do have to kind of trade and scalp and manage your decay somewhat, but it's only about 10 to 20% of what it normally would decay. Sometimes it actually could come in almost for a scratch or better.
Yeah, I think John here, he kind of gets that. He says you get essentially free decay. So it sounds like he realizes he's probably not going to make a home run on the straddle, but at the very least you get, maybe not free, but a low cost swing at the bat for a week or two, right?
Exactly. And sometimes also you get enough of a move where you can just unwind the trade for money, which is nice. Because if it doesn't decay, it helps. And
he mentions putting it on a few weeks before. Is that your time frame? I think you're like a week and a half or so.
Like 2 to 3 weeks generally.
Oh, 3 weeks that far out, really? Okay.
Well, you'd be surprised how little the stuff decays right there. But liquidity providers are pretty good. They pin that. They have that earnings straddle pinned right around that time because that's about the flip flop where you go from you have real decay to kind of settling into that earnings cycle. Because if you buy any premium, let's say if you buy it 6 months out, that juice is so much that it's more than enough to cover whatever the earnings straddle is going to be. And then there's going to be a time as you get closer where things flip and then the volatility has to start going up to keep that straddle priced. So usually I found that is somewhere between 3 and 4 weeks, depending on the name.
Interesting. I always saw that strategy is like a week and a half, 2 weeks was good. Sounds like you can go all the way out almost a month, listener. So there you go. Mr. Rock Lobster, John. I had a feeling this one would resonate with you, Mr. Rock Lobster.
And I'm in Chicago even. I'm here and you're not. I find that very odd.
You should, if you hang out for another couple of days, I'll be back. You come to the studio. We could do a nice show there. So you don't need to go back to the hinterlands of Maine, right?
I know, but it is Maine in the summertime, and you know my rule. I don't leave Maine in the summertime.
That's true. So it must be good times happening. Really quick, we got Mark's, we got Russell's take on your big event. What was your takeaway from the big option pit summit, particularly from a vol perspective? Any interesting nuggets there for your?
Actually, Mr. Rhodes threw us some nice little nuggets there. I was quite happy to look at some of his stuff. Mostly, at least for me, that at least. And we also had some good stuff on biotech pipeline from one of our clients. So we have a strange company where our clients actually present at our own events. That's kind of weird, don't you think, Mark?
It is.
It is. But it works because we have a lot of experts in their particular field. So I got some good nuggets on. I got some good VIX nuggets from Russell, and I got some good biotech nuggets from Derek. So I was quite satisfied with our event, actually.
Good nuggets. Always nice to have good nuggets. I'm sorry I missed it this year. The tastiest steak of all is always the free Mark Sebastian steak.
Yes, that is the best steak.
I asked him to save one for me and freeze dry it. Mr. Rhodes, you have any thoughts on this before we move on to some other questions?
It just occurred to me that Mark Sebastian is the Tom Sawyer of options education.
Dude, you're the Tom Sawyer of options education from Russell.
It gets everybody to show up and do the conference for him.
So he's making them paint his fence, you're saying?
In a way, yes.
And he smiles and shakes everybody's hand, and he has a good time the whole time. Mm-hmm. It works. It works. All right, I'm going to give Mark back.
Good.
All right, thank you for that guest appearance there, Mr. Rock Lobster.
I cut her loose.
We got a bunch of other questions lining up here. I do see something popping in here really quickly in the live chat. P Biggers, I just like that handle. I wanted to say P Biggers, quite frankly. P Biggers saying a double diagonal 3 weeks before earnings is a nice play. Works well with sawtooth vol underlying behavior. So he goes for the double diagonal. He also is going for that 3 week time frame. So maybe a little bit longer than I was thinking. I was thinking a week and a half to 2 weeks was the sweet spot, Mr. Rock Lobster, and of course our old friend P Biggers. That just brings a smile to my face. I like that handle. I lost my track of what I was saying. Oh yes, double diagonals, a couple weeks out. Well done, Mr. P Biggers. Like the handle. Keep it up. That just cracks me up. All right, we got what do we got here? We got this is kind of something we were talking about. I love when our listeners answer questions amongst themselves, Mark. They don't even need us. I mean, if you recall, Mark, on Option Block on Monday, we had Contango Trader asking us if we knew when VXX and UVXY were going to do their reverse split. He said he was asking for a friend of his. We said at the time that it didn't seem like there was much data on that. Well, then one of our listeners, David Kotliar, I'm not sure if I'm pronouncing that right, he wrote in to say, yeah, the UVXY reverse split is set for July 17th, and he sent a link to their press release on it from ProShare. So there we go. If you're wondering, it's July 17th. So all of our listeners answering each other's questions. I love it. We're just the intermediaries from which all of this information flows. I love it. Good stuff. We'll just connect you guys. You answer each other's questions, and we'll just relax. It'll be good. Here's a good one. This is from... I like the handle. Well, his handle, I guess, says a lot. He's SVXY Bug, but he said he's previously written in under the handle Volbug. So he likes his Vol, but I guess now he's really into SVXY. He says, hey, Mark, and Russell, thanks for a great show. Well, you're welcome.
Welcome.
Two questions for you. He's doing a double dealer here. If SVXY somehow goes the way of TVIX, so let's hope that doesn't happen, but if it happens,
it won't.
Would you imagine that XIV would go with it? Or is it managed independently of SVXY? Second question, is using the call-put ratio on VIX much of a leading indicator on the price movement of VIX? If so, do you normally see lead times in seconds, minutes, hours, days, or no lead time at all? Thanks very much for the show. He does add a nugget. Since SVXY is an ETF, could one hope for better management than that ETN of TVIX? Sorry for all the SVXY questions, but I'm married to it. I guess you are if you got it in your handle now. Let's maybe go backwards on this let's start with the call put ratio. We've talked about that a lot on the show. I jokingly referred to it with the Russell a few minutes ago. I said it was 4, so he's getting nervous. I, of course, was joking. It's not a thing most people, at least on the show, don't really pay a lot of attention to unless it's really getting into the extremities of the 5 to 6 range. That's when I start really paying attention. Russell say he starts noticing around 3, but I think he was just saying that in jest. In reality, and certainly not in minutes, I've never seen anything where the call put gets out of whack and then all of a sudden, bam, in seconds or minutes, we see a huge move in VIX. So I would tend to lead to it's not that useful of an indicator. I think it's a useful flag when it gets really out of whack. Then something maybe interesting is afoot. But outside of that, I don't really use it that much. Mr. Rhodes, we were just joking about this before. If you have any extra thoughts on the call-put ratio, what you use it for, if you do. And then his other question is, he says if SVXY blows up like TVIX did, do you think XIV would go with it?
This is we actually just had this entire discussion less than an hour ago at our meeting. Isn't that funny, Russell?
It is funny. We for the XIV SVXY, one is an ETN, one is an ETF. We've actually never had the situation occur that you would need to happen for one of those funds to close, which is XIV closes if the underlying's up 100% in a day. That's just never happened where the futures have risen that much. SVXY actually has a discretionary closing clause, but I severely doubt they would ever impose that as well. They are managed different. They're managed independently and differently. The SVXY has to own or has to be short the futures contracts that they say they're short. XIV is set up to give a return that is equal to a strategy that has short positions in the futures, but they don't necessarily have to have the underlying position, and that's because they are it's because it's an ETN. So they're structurally very different, although they do the same thing.
Mark, you mentioned you had this conversation at your event. What was the takeaway from the conversation?
No,
with Russell.
That's what I said at the event. That was it.
That was your exact.
The XIV is far more likely to go the way of the dodo than SVXY was kind of my takeaway. Obviously, I don't think either is going to happen, but XIV could happen, or we could see something like that happen. But XIV is the one that could actually blow out automatically. And one reason that Russell had brought up why SVXY would not is because, and I don't know if Russell you want to say this, they're not actually holding that much when you compare the fact that they actually also have UVXY.
I think internally they can net out the positions, but also, in order for SVXY to truly, blow up, you need to go down 100% in a day, because it is a daily reset on the performance. So even if VXX were up 100% plus over a short period of time, VXX would be down less than 100%. We actually saw that early last year, early 2016, where VXX was up a lot more than SVXY was down. And it's because of that daily reset that you have on leveraged or inverse funds.
All right, listeners, great questions, all of you. We'll have to leave it there. I know some of these questions are just are epic. We'd have to have multiple shows to fit all these epic multi-part questions in. But keep them coming. We'd love to hear from you guys. We read them all. We try to answer them all behind the scenes if you don't get to all of them on the show. So don't worry. Meanwhile, though, it's time for us to keep on rolling into our final segment. It's time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is indeed the portion of the show where we attempt to guess the future of volatility. I'm going to say all of us this week, not exactly knocking it out of the park. Well, we're still north of the 11 handle, just 11.01, just north of it here as the show comes to a close. So that means the closest guess was about a handle away. That was Mr. Meatball at a 10.05. Mr. Rhodes, I'm still floored at your 9.25 guess. Coming from me or Mark, that would be one thing. Coming from you, that's quite a statement. You guessing a historic new low for VIX Cash, but I saw your reasoning. I kind of went with it. I was feeling the same thing. I thought how July 4th would do a lot more to us than it did. So c'est la vie. I guess Mr. Meatball, you're the closest. I wouldn't call it a victory, but we'll say you're the closest. You get to go first. We are coming into this weird truncated holiday week. What are you feeling for this time next week?
I'm gonna say 10.05.
Well, gee. Where did you come up with that number, sir?
It's won 2 weeks in a row. It won the previous week. It won this last week. 10.05 cannot lose.
Yeah, I guess you did guess that. You have guessed this is your third week in a row now.
Third week in a row. We're guessing 10.05.
It's a guess that seems to win by default. It's elimination. Everyone else is it's the closest. So there you go. Yeah, all right. So I guess that puts me next. I was at 970. I still am feeling less vol clearly than we got here in the marketplace right now. I'm still surprised we're at an 11 handle right now, quite frankly. So I'm gonna go. I like my 970, but I'm gonna go. I don't think we'll be much higher than that come now. I'm gonna move it up a little bit. I'm gonna say 9.85 for this time next week. All right, Mr. Rhodes, that leaves you a lot of room on the downside if you want to go back to 9.25. Go for it, sir.
I'm not going to 9.25. I'm going to say 10.23.
Oh.
What? How come you guys are straddling me so tight? That's not fair.
You got a nice tight straddle. I got all the downside. I'm happy to have that.
Yeah,
Mr. Rhodes can have all the upside.
Completely unfair.
Mr. Rhodes can have all the upside. That's what you get for having the same guess 3 times in a row.
You didn't have to guess first, Mark.
Oh, that's true. I guess I didn't.
Yeah, you could have picked someone else to go. I like going first. I think it's kind of fun. All right, so that's what you get. You pick the same one 3 times in a row. You get squeezed to death, sir. Hence the vicious nature of the crystal ball. We'll see what the gods have in store for us next week. Maybe you guys have a crystal ball guess. Hit us up, send it in. Some of the good ones we'll include. Maybe we should do that. We should have a listener pick every week too. Maybe we'll do that going forward. That'll be kind of fun. Unfortunately, though, that's all the time we got for this week's Volatility Views. Next week we'll be back in the old Chicago studios. So you'll get the nice, on the live stream, you get the drops, you get the music, you get all the good stuff. We'll edit out most of Sebastian's madness. So it'll be good, don't worry. But before we go, let me go back around the horn one last time to see what's cooking with my friends here on the show. You just missed the big Grand Pro Traders Summit, the in-person masterclass, if you will, from Mark and his crew, Mr. Meatball over there and Mr. Rock Lobster. But that said, if they missed their class, Mark, but they like what they heard today, they want to check it out, what should they do?
Sign up with Option Pit. That's the only way to get all that beautiful, yummy Option Pit knowledge.
Then maybe you too can present at next year's Pro Trader Summit. Mark can put you to work painting his fence.
Exactly.
Right, check it out, optionpit.com. If you're an accredited investor, you want to go over there and have Mark maybe pick up some June, July futures VIX spreads for you for 40 cents. Hit him up over there at Carmen Line as well. And last but not least, Mr. Rhodes. A lot of things are cooking over there in the land of all things CBOE. What is on your radar, sir?
I'm starting a 2-month sabbatical.
Oh, you're taking a nice little break, a nice little academic break?
I am taking an academic break. I'm going to be off the road. I'll be in the office, but I'm going to be. It's time to get that title, Dr. VIX.
I like it.
You know,
I'm glad.
Nothing good's going to happen until I get off my butt and
I'm glad I bought drvix.com.
Did you? You
No.
son of a gun. I probably should.
You should.
Yeah. You know, it was one thing that is on the farther horizon, risk management. We got risk management in mid-September in Europe. Tonight is the deadline for the cheapest sign-up cost. So RMC.com or CBOE RMC.com. People should keep that in mind.
Yeah, I was torn with hitting up to that one. I know at the California one, Ed Tilley and all the crew over there at CBOE were leaning on me to come out to the European version and check it out. So we'll see. Maybe if I can get that on my calendar, it might be kind of. I missed the Sintra one. I do love Sintra in Portugal there, but I guess I'll have to make do with London. So we shall see. Check it out if you liked our coverage from it this year in the U.S. version. Maybe you're intrigued. I know a lot of you guys are out there in Europe listening to this show. So check it out if you are so inclined. And on behalf of the Meatball and Mr. Someday, hopefully after a sabbatical, Dr. VIX, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And, of course, for sending in such great, epic, multi-part questions. Keep them coming. And we'll see you next time for more Volatility Views.
Volatility Views is brought to you by CBOE Live Vol. CBOE Live Vol is the leader in equity and index options trading technology, providing professional and retail traders with the most sophisticated options risk analysis, compliance, and trading tools. CBOE Live Vol offers a broad spectrum of advanced trading technology, including the Live Vol X, next generation execution platform, and Live Vol Pro, the new standard in options trading front ends. Visit livevol.com for a 15-day free trial today. And by Russell Investments, the home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.